been an absolutely massive week for the crypto markets. We have a whole lot to talk about in today's show because we have one of the most feared indicators which has just fired off, that being the 50 and 200 SMA death cross. We'll talk about that in today's show. We'll talk about the on-chain metrics and what happened over the course of last week and what it means going forward. And we have a whole lot of data to look at in today's show. So make sure you smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into the show content for today. We can, of course, as usual, start off over here on the Banter Bubbles charts, which you can see, just getting an overview of what the chart looks like on the daily and the weekly. Weekly still mostly down, just a couple of coins that are up. You got HNT, SUI, TON, WIF, TAO, some of the outliers over there, which stand tall amongst the rest. You have OM, Crypto.com, Arbitrum, again, HNT, SUI, and TON on the daily. And then if we look at the hourly, most of the coins trying to put in a little bit of a bounce over here on the daily. We spoke about coming into major resistance, looking for the pullback throughout this week. And now the question is this a buy the dip opportunity, right? We got the magnetic pull into that death cross between the 50 and 200 SMA as the 50 crosses below the 200. But what next? What should you do next? Is it time to panic? Is it time to exit the market? Are we going down to new lows? What exactly is going to happen next? Let's talk about that. Firstly, monthly candles shaping up to look very, very bullish. Still a long month to go, 21 days, 18 hours left. But if you do start to see this closing green or even slightly red, as long as it's above $62,000, that's going to bode very, very well for the long term. And it's going to look like a major shakeout within the market. You can see the bullish demand that comes in every time prices come into those low levels. It does look rather strong, but we have major resistance overhead on the weekly time frame in the form of the 21 weekly exponential moving average, which is sitting in at 61,733. And then what I did is I've also taken these lines over here. You can see the horizontal lines in terms of the major open and closing points as well as previous weekly wicks, and that comes in at this area over here between 62 and about $63,000. So those are some very, very big levels that you want to see the bulls reclaim. And most notably, we have our high time frame trading range over here with the orange line being at the top. Now, it's hard for me to believe that the next time we attempt to come into this level over here, which has been governing those lower heights, that we will lose that zone. It's I think the next attempt up and the reclaim above these key levels, you're probably going to be looking at price expanding above that zone. So we'll talk about when that could particularly happen, and we'll also have a look at a bunch of other factors like the potential inverse head and shoulders, which is still in play. And I say potential because unfortunately you can only confirm the signal once you break above the top side over here, which is the neckline. If you simply use a highlighter tool, you can very clearly see the left shoulder, and we moved onto a line chart, removing the noise from the wicks that we see on the general candles. You have the head over here, and then you have, of course, the right shoulder, which is currently forming. And that's why it was so important that we saw Bitcoin close the weekly candle at that $58,000 level, which is what we've seen. And then I said that what I'd love to see is if we can see this week's candle, which of course we're on Saturday now, so we still need to wait for the Sunday close. If you can somehow see that closing above 62K, well, then you're going to be clearing some of these major resistance levels, most notably the 21 EMA, which ultimately, as long as you remain below that, suggests that it is theoretically risk towards the downside, meaning that bears are in control, but bulls have the opportunity to strike back at any moment. We're still coming off of very, very low volatility, which has started to expand. Now, the expansion of this volatility from such a low period would signify, if it happened to the downside, essentially that could end your bull market, right? That means you might have to reevaluate absolutely everything if you start to see this signal move towards the upside while price is breaking down, because remember, it is direction neutral. So I'm less inclined to believe that to be the case due to many other factors, which I'll discuss today as per on-chain metrics and a whole bunch of other data. But at the end of the day, we do have the death cross, which is currently taking place. We'll look at what's happened the previous times, especially in relation to where we are post-halving cycle, right? Which is exactly where we are in terms of this cycle. Overhead liquidity lines up with that neckline over here, which is coming down. A break and close above $68,000, as mentioned, makes me believe the next time you come up into this zone and attempt at this, you're likely going to leave that region towards the upside. And you do have that liquidity currently stuck there with $1.48 billion worth of liquidity sitting exactly at $70,400, which if you do get there, breaks you above the neckline. Now, for those of you who think I'm talking absolute gibberish, you've never heard about any of this stuff, please make sure you join Whale School, right? This is a free trading course that I compiled with all of my wealth of knowledge, almost a decade worth of knowledge that I've built up over the years, and I've put it all into this course. It's 100% free, but there is a time limit, right? And there's also a cap on how many people we can take. Last time I checked, we were at about 85% capacity. So for the last 15%, if you do want to join, use the link in the description below, go through to Whale School, don't Google it, use this exact link, click that, it will take you here. There are scam sites that mimic us, so please use that exact link, and you have 11 days, 5 hours left to join. Pause the video right now, do it, and then you can continue on once you've completed that. Now, I want to go into some of the on-chain metrics as well. Looking at Glassnode here, which provide a plethora of very, very valuable information on chain. And what we've noticed over here is it's mostly the short-term holders that are driving the recent volatility that we've seen within the market. So this has been one of the biggest drawdowns that we've seen. If you look at the bull market corrections over here and the blue lines over here, this has been a 32% drawdown from all-time high. This is the most severe drawdown that we've had of this particular cycle, which of course started at those FTX lows. So that's one thing to look at. We can also have a look over here at the Mayer multiple, which simply shows you what the ratio is between price and the 200-day moving average. And when you have a look at this, it came down to a value of 0.88, which is also the lowest level that we've seen since the FTX collapse. So coming back down to the green line over here, showing a great value zone. So everything that I'm showing you over here, we moved about 1 standard deviation away from the mean, and it's all due to those short-term holders. So short-term holders current cost basis is sitting at $64,300, and then you have the short-term holder cost basis at -1 standard deviation away, which is the level that we came to, sitting at that $49,600 at the blue line. So that shows you that the short-term holders are obviously a little bit underwater, but to give you some perspective of what this means when price comes down to that lower band, this is something that out of 5,139 trading days that we've had in Bitcoin's at least trading history over here, we've had 364 of those days, only 7.1% of those trading days where prices come into that standard deviation, the 1 standard deviation below the normal price. And usually that leads to a short-term bounce from that particular region. So they're currently the only ones, the short-term holders are the only ones, if you look over here at the MVRVZ score, that are underwater, lowest value since 2022 cycle. You can go on to the short-term holder percentage, supply and profit, and look at those bands as well. And you can see that most of the short-term holders are underwater, but the long-term holders are still fine. Going forward over here to the true market mean and active investors, what you're noticing over here again as well is active investor prices are sitting at 51,200. What that simply means is you're adding a little bit of pressure if you come back down to those lower regions where this could start to shift the overall market sentiment. If the active investor that's been in the market for the last couple of months to years starts to feel the pinch, then they may actually be more inclined to sell. The true market mean for the longer term guys is sitting at 45,900, and we've spoken about that as a significant horizontal level on the price chart that must hold, right? It lines up with what we're seeing in the on-chain metrics as well. And ultimately, what you're seeing over here is, again, serious financial pressure to the short-term holders. So This is why it's better to have a longer term game plan when it comes to trading the markets. Whenever you look at any of these charts, everything that we're seeing is in terms of the short-term holders that are feeling pressure, right? If we do start to lose below $40,000, then ultimately what all these charts are telling you is that's where you need to start to reevaluate. Most of this has been due to the futures liquidation events that took place. We saw $1 billion worth of liquidity taken, right? With massive liquidity coming from the long traders as price catapulted towards the downside. So what does that mean going forward, and what does the death cross mean? Well, we can actually mark this off on a chart, and simply the red dotted lines running vertically across the screen represent that death cross. If I zoom in over there, you can see, I'll go in even closer over there, the green has just started to cross below the pink. That's the 50 crossing below the 200 SMA. And then of course the yellow ones over here represent the bullish crosses that we've had. So that was the last bull cross that we had on the 23rd of November, and that did lead to continuation in price. But you need to take this into perspective using the halving cycle as a proxy for what may come next. Let me just quickly have a look at one of these charts over here. I think we'll bring this in screen. Let's bring this chart in screen. So this has been the bias. The yellow lines over here represent the halving cycle. So what we can do is we can go back and we can actually look at what happened during the death crosses that occurred after the halving cycle, but before the cycle peak. Now, keep in mind that our target timing-wise, the trajectory over here for the peak is lining up somewhere between May and October of 2025. So we still think that this is a right translated cycle. I've been beating that drum for a long time, saying that we think that it's going to be a long time before we see the major cycle tops. So let's go have a look at it. Yellow line over here, December 2012. Let's go back onto this chart. Here's December 2012. Did you have a death cross after December 2012? No, not until the end, right? You had one golden cross over here, and that of course led to a major move leading into the top of the bull market. At that point, the peak was set in. So let's go to the next one over here, and we'll have a look at the following cycle, which the halving event took place on August 2016. So let's go to August 2016. Here is 2016. We were in, there we go, September 2015. Wait, we have to go a little bit more forward. August 2016. Any death crosses over here? Nothing, right? Look at that. The last time was you got the golden cross that occurred over here in 2015, and pretty much price floated all the way up until you got the bear market. But at that point, the cycle top had already occurred, right? When we have a look at this chart over here, remember, again, I'll remind you, our belief is the cycle top will occur at some point in 2025. So no data point to use over there. Let's go to the next one, which was going to be June 2020. And this one, we might have something to look at. June 2020 was in this time period over here. So looking forward, we had, here we have it, the death cross in February, or excuse me, the golden cross in February. The death cross occurred over here in March, and then you had the golden cross. So the halving cycle actually only occurred just after the golden cross. So this is why I say, to me, this is a little bit of a nothing burger, right? When you go through to this time period over here, we've looked now at every single interaction with price following the halving cycle and the death cross that occurred after the halving cycle. There have been none. This is the first time that we've seen that, and therefore, in my personal opinion, it's a little bit of a nothing burger, right? We can see prior to the halving cycle, though, we did get one death cross that occurred over here in September 2023. Let's just double check the dates over there. September 2023. So that was again before the halving cycle. Before the halving cycle, we had a death cross. Price held up over here at this 25K region and continued towards the upside. So what do I think is going to happen next with this environment over here where we printed this death cross? I think it's a bit of a nothing burger. I think we'll continue to chop within this region, because if you look at this chart over here, you have a descending broadening wedge, which currently seems to be holding up, especially on a closing basis. We have the fear and greed, which is fully reset to those lower levels. And based on our halving cycle theory, as well as everything that we've looked at in terms of the on-chain metrics, metrics. The long-term holders remain healthy, and the bull market should still be intact and in full force. Where do we start to become fearful? If we start to have closing candles below $40,000 on a high time frame basis, that is where fear comes back into the market. Otherwise, I think expect price to continue to chop around here for a little bit longer, and within a couple of weeks we should start to reclaim those key levels. Why do I say this? Well, history tells us that usually major corrections within a bull market have a drawdown of in the region of 30 to 40%. We saw the biggest drawdown, that being 33% in this particular cycle, and timing wise those correction phases last 4 to 6 months. We are already 149 days into that correction in terms of weeks. Well, that makes it 21 weeks, which is just over 5 months into this correction, which means less than a month left, and we should hopefully be coming out of this phase. So there is resistance. Of course, we hit the fair value gap over here. We had the island reversal. We came into the CME futures gap. We have a little bit of a rejection over here. Now you're looking for higher lows to form on the lower time frames and to get back above again $62,000. This is why this is an absolutely critical and significant zone to flip into support. Right? You can see over here, if you look on the daily time frame as well, price rallying into straight into that 200 MA. This is the 200 MA, the dark blue one, and then the light blue one reclaiming the 200 exponential moving average, holding that as support. We're also above the 9 EMA, but below the 18 EMA being the pink one. But most importantly, we outlined this major resistance area that we wanted to get back above. We got above it. You're above the yellow line, meaning your RSI is trending towards the upside, that being your relative strength index. Now, what you also notice is if you have an eye for it, anytime that you get a big major candle towards the up or the downside, that leads to inefficiency. Inefficiency, also known as a fair value gap, can be marked out by looking at the wick that occurred previously, which is this one over here. So this is the wick. We'll zoom up a little bit. There we go. That is the wick that occurred prior to the inefficiency candle. And then you can look at the next candle's wick that occurred following the inefficiency candle, which is this wick over here. That gives us a certain zone where price most likely will revert back into that zone. So don't be surprised if you see Bitcoin pulling back a little bit more, maybe anywhere between another 1.7% down to possibly even as low as 4.4% into the zone. All the death cross supporters are going to be shouting that we told you so. The death cross took place. We're nuking, but keep in mind, this is a fair value gap. So let's probably label it over there, FVG. Feel free to look it up. Remember, I discussed this stuff as well in Whale Room, the private Discord. We do use this quite often in our trading. And therefore, you're looking for something like this, right? This becomes an area to bid as price pulls into the fair value gap. Look for support to be found on the daily, and then the next attempt should get you back above those moving averages. Flip that into support, and it's all going to be hunky-dory once again. We look for continuation higher. So that's currently the picture on the daily time frame. If you do want to take this trade and you're looking for a new exchange to trade on that has no KYC, so if you live in the US or anywhere in the world but you don't want to give up that personal information, use 𝗬𝗕𝗓, right? 𝗬𝗕𝗓 has a link in the description below over here. You can actually claim up to a $6,800 sign-up bonus for being a new member. Just come through, look in the link in the description below. They have a whole bunch of little tasks that you can complete over here. By completing each of these tasks, you claim your rewards, right? So the link is in the description below for 𝗬𝗕𝗓. I'll be looking for that same Bitcoin trade. Now, I want to dive a little bit more into the significance of reclaiming that $62,000 level. I've shown you multiple reasons why it's significant, right? We have this high time frame resistance coming into play over here. We said that we want to close above that so that we can keep the line chart running up, but not too aggressively. We don't want the line chart running up into a V-shaped recovery, but rather a slow grind. That's one reason. We spoke about as well getting back above the 50 and 200 EM or SMA, which is the death cross. We spoke about the timing cycle over here of grinding up over the next 4 weeks to complete the 6-month corrective phase. We spoke about the fair value gap and getting above these moving averages. And then when you look at this chart over here, you can see there is a high volume node. This is your point of control, which is where price rejected from. This also happens to be your 4-hour 200 exponential moving average, which is just an additional little hurdle that bulls will be looking to get back above, which is currently situated at $62,000. If you look over here on the left-hand side and you look at these volume areas over here, you can see see the volume areas over here. Once you break back above that, so you can see this zone over here, once you break back above that, usually similar to a CME gap, you'll kind of suck into these zones over here, into this little pocket, and you tend to hold that as support. So this is a big level. Get back above here, suck into that little pocket over there. When you look left, there it is, into this zone over here, and that starts to become a really, really nice area of support for the bulls to hold. So right now, we have reclaimed above the 50 EMA on the 4-hour chart, still rejecting from the 200. If I move on to the hourly to give you a little bit of a different picture, well, there might be a death cross on the daily, but there's always a golden cross somewhere else. So if you are looking for the silver lining, then the golden cross is between the 50 and 200 EMA on the 1-hour time frame, and you're looking to continue to maintain this as an area of interest, right? Looking for price to hold this on a closing basis, and you can continue to monitor that trend. Some of you may be down significantly in your positions. This is a question that I got from somebody in one of the Whale School live cohort sessions. We do these live workshops. You guys get to interact with me in the same way that this guy did, and you can ask your questions. I provide my best possible advice, or non-financial advice, I should say, given whatever your particular situation is. And this is just an example of what you can expect in Whale School workshops.
I've been long-term on spot trading. Should I cut positions if I'm down 20% or more, or is that only like for day trading?
It depends if you have a stable career and you have new income that's going to be coming in, which you're willing to allocate into that position. If it is in a downtrend, but it's fast approaching major support, then no, you don't need to cut the position, because you could rather allocate some additional capital to bring your average price down at key support, which should lead to a bounce, and then you can cut the position. Think of it with the volatility of crypto. If you just take the loss, 20% is pretty easy to get back when hype comes back into the market. But if you go down 70-80% now, it's going to be near impossible. You're not going to get the money back. Okay, cool, guys. Yeah, use the link in the description below. Definitely join the course. I really have put in a lot of blood, sweat, and tears into the course, trying to give you the best possible value. The link is in the description below. But actually, just to touch on that point, a little bit further, what I said over there is if you do have additional income that's coming in, and this is what I recommend. A lot of people want to leave their careers. They want to exit their jobs and just go full-time crypto. But I really, really encourage each and every one of you, try find ways outside of crypto to continue to earn income and filter that through into building a strong portfolio, specifically in spot trading, right? Do not underestimate the power of having additional income on your psychological thinking, right? In terms of your psychology, you will be much more stable knowing that you have extra capital that's coming into the market, and you'll have a much better opportunity to succeed. Remember, you in trading and investing, you're essentially a professional risk manager. Part of managing that risk means you want to decrease the risk as much as possible. By decreasing the risk as much as possible, you need multiple streams of income, right? If you're relying purely on crypto, it's like trading on 100x leverage all the time, right? You're stressing the whole time, this trade better work or I can't eat. That's not the way to be trading, right? You're going to struggle in that type of environment. So use the link below. I touch on this a whole lot more again in Whale School, and then let's continue. Okay, ETH still putting in a big move over here. We're waiting for ETH to turn green. Definitely still lagging on the weekly time frame compared to what Bitcoin's done. Bitcoin's candle is already green, so we'll keep an eye out on that. ETH BTC is still down. The trend has not reversed, right? It is still towards the downside, but Solana ETH is coming back down towards the top of the range. This was the breakout level, and this is why you want to wait for confirmations, right? If you simply just converted all of your ETH upon the breakout into Solana over here, well, at this point from top to bottom right now, you've already lost 8.4% on that particular trade. Now, the chances of this holding as a range high is pretty significant, that Solana continues to outperform, but it probably still comes a little bit deeper, right? Most likely you see something like that, and then a base formed, and then you have continuation out of that zone. If you do get a deviation, and you don't know what a deviation is, again, covered in Whale School, but a deviation would be where you essentially break back into the trading range. That usually leads to pretty powerful moves towards the downside, at which point then you expect that ETH outperforms, right? This most likely happens in a risk-off environment. Chances are that if we're moving towards the upside, people are going to keep bidding Solana, right? Buying Solana towards the upside. So here's your Solana USD chart. It did come into major resistance. You are starting to pull back over here. What I would do is look for major support by using the fib level and simply just marking from the bottom of this move to the top, mark out the 50% level. That's the zone that you want to see hold. So if Bitcoin pulls back into the fair value gap, you're looking for Solana to pull into this zone, possibly about 137, 140, somewhere around there. Hold that level over there and then look to mount an attack and reclaim above 160, and then you can continue towards the range highs, and maybe the next attempt at those range highs is where you actually do start to see a breakout. Another coin that's been doing well is, of course, TON. If we go through to TON, well, you can see a big break and bounce over here from the bottom of the range lows. That came in at $4.80. You had a 38% move. But this is something that I discussed a whole lot, right? For me to get the perfect entry in TON, I would need it to come down to $3, just from a technical perspective. That's the technical perfect support that I'm looking for. So consequently, because I still viewed that there's a good chance that it will bounce from this region, I looked for higher beta plays. I shared this well in advance in Whale Room, which is, again, of course, our private Discord community. And what we're looking at is, keep in mind over here, 38% from bottom to top. What we're looking at were trades over here. These were actual trades that we took on resistance cat being the one, 134% move. This is meme coins on Telegram, on TON, right? And you got 134% move over here versus 38%. All whilst the market is still in a very fearful mindset. When the market starts to turn risk on, this is where you start to see these things outperform the main chain coin like TON. You'd outperform that instead of by a factor of 2 or 3, by probably a factor of 5 or 6 on every upside move. So breaking out of the falling wedge channel, breaking back into the bottom of the range over there, looking really good. Next move probably takes you up to the mid-range over here at 50 cents. And thereafter, you can start to target back towards the highs around 80 cents. So that is resistance cat. I've outlined my whole thinking in Whale Room for why I think this is a cycle long play and something that I'm looking at for the longer term. It's still a very, very low market cap. The other one is, of course, resistance dog, also a leverage bet. We took this trade from exactly down here. Same thing, breaking out of the falling wedge, breaking back into the range, holding the range low over there, up 94%. Again, reminding you against the 38% that we saw on TON. And these are pretty big moves, right? TON outperformed the majority of the market over the course of this week. So all of this has been dropped here in advance. You can see already on the 29th of July, almost 2 weeks ago, we were already prepping for that move. I made everyone download the TonKeeper wallet, and we started prepping to purchase some of those coins. So if you do want this alpha, I did actually just drop a brand new meme coin in here, which I think could also do phenomenally well for anyone that's in Whale Room. Please go and have a look at that and check it out. Look at the fundamentals for that. I think it's a phenomenal bet. So that's it from me, folks. Have a look at the link in the description below. I'll see you all on the next one. Join Whale School, join Whale Room, and I'll catch you on the next one. Cheers for now.